Hi, I'm just welcome to another webinar on technical trading strategies. I'm just wondering if I'm live and whether the picture and sound quality are quite good. Okay, I'm sure I'm live here anyway. I'd just like to welcome you all to another webinar. Ankit, Chris, Patricia, Iraq, John. I see you're actually joining me on this webinar at the moment. Okay. Welcome to another webinar on. Okay, I just okay. So okay, and today I'm just going to go through some technical trading strategies, looking at stocks and commodities and stock market indices. I suppose we're going to use charts that are quite current. I'm not going to use hypothetical examples. So whatever you might suggest as we go through this 1 hour webinar, you might like to take a look at some stocks or stock market indices or commodities that you might like me to have a run through. So I'm sure there'll be about 5 technical trading strategies that I'll actually work on. And I'm going to use a couple of websites, one of them Yahoo Finance, and recently they've actually updated their interactive charts, so it's quite useful when it comes to looking at technical trading indicators. And another website I'll be using will be ADVFN, so you'll see that website coming up soon, and that's a lot more interactive, and it allows us to actually draw on the diagrams. So I'll just take us through to Yahoo Finance. I'm just going to share my screen. Okay. All right. So we have Yahoo Finance. Okay, I'm just working on S&P 500 at the moment. We'll just take a look at this chart and see what's actually going on in the last number of weeks, and even we'll go back a couple of years also, because it's always good when it comes to technical trading to identify possible patterns where we would maybe incur what's called resistance and support levels, and these will be some kind of indicator as to how we would enter and exit our certain trades that we might be interested in. Okay, so I'm going to take a look at a 1 year chart on the S&P 500, and okay, so at the moment what I've done, I've changed the market line as a candlestick, a Japanese candlestick. For those who are quite new to Japanese candlesticks, the red bar indicates a fall in the stock market, whereas a green indicates rising markets. Okay, and you'll see some candlesticks that are quite longer than others, and that just means that if it's red, the stock market opened higher and closed lower, and in this case closed significantly lower relative to, say, this green candlestick, where the stock market opened up and closed a lot higher than, well, not a lot higher, but closed higher than its open position, and hence we had a positive day in the S&P 500 today. So also what I've drawn here are what's called simple moving average lines. I'm just going to knock those out So we'll actually see what they look like without the moving average line. So this is one of the technical indicators that some traders would use in order to smooth out all the noise in the market. So what we mean by noise is this volatility, this up and down movement. And at times this can get quite confusing to actually understand where the price is actually going in terms of its short run direction. So smoothing out all the noise or filtering through all the noise in terms of media and people speculating and so on, it's useful to use the simple moving average. And one that's commonly used is the 50-day moving average. And I'm going to add another one in, and another being the 20-day moving average. So I just want to make sure these are highlighted quite clearly. Okay. So we have a 20 and a 50-day moving average, simple moving average. And the 20-day moving averages are 20 days of prices that have occurred in the recent past, and the 50 are 50 prices averaged out over the recent past again. And what technical traders would be looking for is the 20-day moving average to rise above the 50-day. And that's a positive indication, an indicator in the stock market. So here we have the blue line, which is the 20-day moving average, rising above the red line, the 50-day moving average. So some technical traders would see that as a buy signal, especially when prices are higher than both lines and when the 20 and the price action is actually positive. Okay, at times there'll be false signals, but this is pretty much a tried and tested strategy, and known as a momentum strategy, that would identify how a trader might get into believing that future price action will be quite positive. So the 20 is crossing above the 50-day, and this is an market entry. And we'll see at times the 20-day moving average almost hitting off the 50-day and turning around again. So almost crossing below hand. And if that had crossed over, it would have been a sell signal. So the trader in this case would have decided to hold on to their position, and we'll see the positive uptrend in that particular market. Okay. Again, the prices fell. Okay, this could be a trader might want to know when they'd actually get out of the position, and it might occur where the crossover has begun. So they might get over at this, get out of the trade once the stock actually declined, or the moving average declined below the 20-day moving average. Okay. Again, you wouldn't enter into this trade even though prices are above. You wouldn't enter the trade because the 20-day moving average is actually below the 50-day moving average in this case, and also it's falling. So there may be an entry position at this point, and again a closing position at this point. Now that's quite a steep drop in terms of this S&P 500, and if you were to close out your position, you wouldn't necessarily be closing it out here, because it could be a turning point where the 20-day move bounces off the 50. So you might be closing out your position around about here, which is quite a drop given what's happening over the last week in the S&P. Okay, so you as a trader will not use this solely as a way of entering and exit the markets. If we look a little bit more historically over a 2-year period, we'll see the overall trend. And this looks as if it's possibly done as a weekly basis. So you see the 20 and 50 day or 20 and 50 week, it's quite a significant gap. So I'm not sure about this really. So I'm just going to go back to the 1 year. Traders wouldn't necessarily use this solely as a method of deciding when to get in and out of trades, but it is a useful indicator, okay, to identify these positions where the market is actually turning. So it's not going to actually tell you the turning point. It's not going to tell you the turning point when to get out of the market. So you might have to use something what we might consider maybe understanding Japanese candlesticks, which is the patterns that these candlesticks actually give us. And also what's another good indicator to complement the 50-day and 20-day moving averages would be what's known as a relative strength index. And again, Yahoo Finance allows us to use the relative strength index, where we see here, also known as the RSI for short. So I'm just going to put that in. And the default setting is a 14-day. Wells Wilder, the technical analyst who came up with this relative strength index, recommended a 14-day period in which the relative strength index should be used. Now, you're not going to see this on the price chart. The relative strength index is shown just below the price chart. Okay, and the relative strength index is pretty much a momentum trade. It actually identifies whether there's momentum being built up in a stock and whether that momentum is actually slowing down, and if there is actually a turning point occurring in the marketplace. And if you look closely, if it's visible to you quite clearly, you'll see that it almost looks like a sideways trading action, where it reaches a certain level, a high level and a lower level. And you may notice that these levels are about, according to Yahoo Finance, they're about 70 and 30. Okay, at times the highest point will be 100, not visible here, and 0. Okay, so what does this mean? A relative strength index identifies whether there are overbought or oversold positions in the marketplace. So an overbought position in the marketplace is where this action reaches approximately 70 or even 80. And if there's an overbought position, it may indicate that there's a slowdown in the momentum, or maybe there are more buyers than sellers at that point, and it's actually reached its point, a saturation point. And likewise, if the relative strength index falls to a level that's about 20 or 30 down here, it may indicate an oversold position. So there are pretty much no more sellers left in the marketplace, and the price action begins to slow down and maybe trend sideways, or may revert back on the uptrend, albeit temporarily. It may continue its downtrend again. But this relative strength index will indicate some of these turning points. Okay, so see, for example, here, this kind of coincides with a turning point in the price action, in the S&P index. Okay, and we might see another indicator here, especially when there's a steep sell-off. We'll see that the relative strength index has indicated an oversold position. Okay. Okay, what's useful, I can't draw on these diagrams in Yahoo Finance, which is unfortunate. I'd like to be able to put in some trend lines. But if you can imagine a trend line, I'm just going to, if you follow the cursor that I have here, by identifying, say, this point, which is looking back in hindsight, because technical analysis is all about using past price action to help us predict future price behavior or patterns. Okay, so I'm identifying this low point, and if you could imagine drawing a line through all of these points. Okay, so this low point passing through this other low point, and we passing up here. Okay, so imagine that straight line, that's trend line. Okay, this may be seen as a resistance line, where the price action is actually trending. And once it breaks, usually the prices bounce off this. So what we're looking for, just imagine if we were at this point here. Okay, what we're looking for is a continuation of that trend. And if it happens, the price or the index tends, if it actually heads towards the support line, which is what I've just drawn here imaginatively. So if it falls towards the support line, we're looking for it either to, 1, bounce off the support line, or 2, break down below hand. So in this case, there was weakness in the marketplace, and the price action, or in this case the S&P 500, actually broke below the support. Okay, if I continue that support line above here, you see it now becomes its resistance. So this price action, we had a turnaround and heading towards what used to be the old support and now becoming the resistance line, and it failed to break above that old support level, and hence it's trending sideways. Okay. Also, So that's one way of seeing a breakdown in the trend, or possibly an end to a momentum trade. And what we have then, if we look at the peaks, now I know it's quite easy to say this in hindsight, but this is a proven strategy for technical analysts. What we're looking for here, and likewise with any trend, we're looking for higher lows. So this low is higher than this previous low, and we're looking for higher highs. And I suppose we see it quite evidently in this part of the S&P 500. All of these lows here, there's 1, 2, 3. There are 3 lows that are one higher than the previous, and we have 3 highs, one higher than the previous. Again, proving that there's a momentum play, or if you would like to call it, a trend following play in this index, until it actually breaks down. So if I drew another line here, you can draw lines within the diagram rather than having one major line. So you can identify almost like a sub-action occurring within the marketplace. So drawing a line below these minimum points, showing the support. And again, if I drew another parallel line above these 3, again, we have what's called a channel. So this is a trending channel. Okay, so the market is trending upward within this channel. And again, if the prices could continue on, if we had believed that if we could extrapolate what this would look like, we might believe that the market's going to trend within that channel until it might break above it, above the resistance, and continue a new upward trend, or break below and continue result in a different trend. So in this case, the market was weak enough that it actually broke below that support. Again, I'll just draw it with this cursor. So you can imagine a line here breaking down below the support level, and again, a change in the direction of the market. Okay, I'm going to go back to the relative strength index, and I'm going to relate what's happening here with what's happening up here. A bullish indicator for stock market analysts, and when it comes to technical trading, is you want to have these lows to be higher than the previous low, or these highs to be higher than the previous highs. So that's building up strength. And again, if we see here, we see a high. This is one of the highest historically for the S&P, hitting a level of about 2,000 here. Again, a very key level, which might make some traders quite cautious. But we see here another high, which may be an indicator that there's still a bit of strength in the marketplace, because we're always looking for these higher highs and higher lows. So why is this high so different to this high? Okay, and in that this high here beat the previous high and supposed to be giving us a good upward momentum. And if that was the case, we would say, okay, this high is better than this high, or higher than this previous high. Therefore, we should be building up momentum. Okay, assuming that we don't know what's going on here. Okay, so you might be thinking there might be a turnaround, and we might see another high here. And if you wanted to extrapolate what we actually done here, you could almost believe that the market's going to continue rising with a little bit of volatility on the upside. Okay, well, this is where the relative strength index comes into play. Here we have a new high, better than the previous, and relative strength index should really meet and confirm that this is a strong momentum play. And if we see here, I'm just going to highlight this high here, and if you follow down the line, down to the relative strength index, you see a red circle just at that relative strength index high. That's also almost following the same pattern as the price. So I'm just going to bring this cursor down to where I'm talking about. So this high here in the relative strength index is similar to the high in the S&P 500. But if we look ahead to the next high, we'll see that high in the S&P 500 higher than the previous, but the relative strength index, the high has not surpassed the previous high in its relative strength index. Okay, So if we could draw on this relative strength index line, we would just draw a line from this high down to this high here. And that's telling us, or even indicating to us, that there's probably weakness in the marketplace. The strength isn't being built up. The momentum is not being built up in order to support that new high in the S&P 500. Okay. So there's a couple of things that had gone on prior, and I'll show you one more. But a couple of things has occurred in the S&P in the run up to what's actually going on in the last week and a half, 2 weeks. Again, firstly, the long-term trend. When I say long-term, going back to January or February, the long-term trend drawn that straight line all the way across here. It has broken the support level on July 31st. Continuing on the support line. It reached the support line on August 26th and never broke it. So that support line has now become the resistance. Another thing is that the simple moving average lines, the 20 has broken down below the 50. Okay, it did break up again, and it may be an indicator that, okay, you may go into it, or some traders may decide it's possibly just a warning of what's to come. Again, it's hindsight is easy to say something like that, but the long-term trend is actually broken. Another indicator is it's reached a psychological level of 2000. Okay, it broke it, but it's kind of bouncing off that level of 2000. And thirdly, we're kind of being at an overbought position in the relative strength index at these levels around the end of August, beginning of September. And on the 18th of September, it reached a new high, which may appear to be a good positive indicator for the S&P 500. Okay, but looking at the relative strength index, that new price high is not matched with a new high in the relative strength index. Therefore, and it shows a downward trend in the RSI. Okay, so that is a huge forewarning as to what should occur in the marketplace. And the last thing I want to point out about the S&P 500 in terms of maybe a further confirmation as to how things might end, in other words, what's happening over the last while, is this candlestick. I have it covered with the black dot. Okay, but Japanese candlesticks can indicate certain patterns or potential plays in the marketplace. And this one, if I can zoom in a little. Okay, there we go. So this particular Japanese candlestick, they seem to have, when they go together, there seems to be some kind of patterns emerge. Okay, but in this case, this is possibly known as a shooting star. Okay, it has a smaller red or possibly green area. In this case, it's a red one, and it has a line rising up above it, and this is known as a shooting star. Okay, and once a shooting star occurs at a new high, this is possibly seen as a turning point in the marketplace. Okay, so some Japanese candlestick traders would possibly rely on this as a technical trading indicator that a turning point actually occurred in the marketplace. So if you're solely concerned with looking at simple moving average lines and waiting for the crossover to occur, you're not going to get out of the market here. You're probably going to get out of the market around here, which is at the slowest point. Okay, so trying to have some kind of forbearance really as to how you'd identify a turning point is look at maybe a Japanese candlestick known as a shooting star. The main body is above the previous and the one that's following, and it has a line coming out from it. That line is just indicating that that was the highest point that the S&P reached in that particular day, and it closed that bit lower, hence the red area. And again, the relative strength index is a good indicator as to identifying whether a particular momentum play has come to an end. Now, that's all well and good in terms of identifying what's actually happening at around this point and seeing if we can actually identify whether we should be getting in or out of our positions. But possibly, what about now? Okay, so you might think, well, what do I do now if I was looking to get into the trading, maybe buying or selling the S&P? Should I continue shorting the S&P, believing it'll continue to go down, or should I buy? Okay, so I'm just going to take a look and see what the charts give us. Okay, just going to go to that other website and see, does it have anything interactive that I can work with? So let's see if I can get the S&P 500 again. Okay. Exchange. Okay, I might as well stick with the S&P, as that's what I was looking at. Okay, just going to look for it. It seems to be giving me 4. Anyone have any questions in the meantime? I'm just waiting for this. I should be able to see on the chat roll. All right. Okay. Okay. Not sure if I can find that S&P. Okay, I'm not going to find that S&P. So I'm just going to head back to this chart. Okay, so what do we necessarily do with the points today? Okay, so again, if I was to draw on this chart, again, we look at the long-term trend, drawing a line under all the higher lows, and again the higher highs, and we see the channels occurring. Okay, and that breakdown. Okay, I'm going to draw possibly a line at this point here. Okay, which is, I suppose, basing it off the current price and seeing where it actually is falling. So you see that common with the previous highs on this trend, it tends to kind of match up with the price where it's currently at the moment. So some traders might particularly draw a straight line going across there and see this maybe as a support line, a sideways support line. So they may possibly see this as an entry with a tight stop, and especially when there's an oversold position on the relative strength index. Okay, so we're seeing there's a huge oversell regarding the S&P 500, and that again could tell us that all the selling has pretty much exhausted for the time being, momentarily anyway. But other than that, if you were to put it to me and ask me would I enter into a trade for the S&P at the moment, and based on the volatility that this market is actually experiencing at the moment, I'd pretty much stay out with the old adage that's on Wall Street: never catch a falling knife. So to me, I prefer not to be in this market. But if some traders might see this as a buying opportunity, okay. I'm just going to go back to ADBFN and see what else we might have. We may look at the FTSE 100. And see, does it give us something similar or somewhat different, something different? Because stock markets tend to be somewhat correlated with one another, so you may get to see some similarities between the S&P and the FTSE 100. And it's always good to look at technicals from a short time period and a longer time period. So I'm just going to change that again to candlesticks. Again, may not be as clear as the Yahoo Finance. And we see, I'm just going to go out to maybe a 2-year. And again, we see something somewhat similar to the S&P 500. Again, we have some trend being built up, a momentum play. We have again higher highs here and higher lows until that actually breaks down. And a lot of this sideways trading actually broke down below the old support line. And again, we have a declining market. And what's actually interesting is the level that's reached. That's quite similar to the previous low experience back in July 2013. Okay, it'd be interesting to actually extend that back and see where that actually leads us to. Okay, so that's quite an interesting chart. Okay, this could be seen as a long-term support line that was once a resistance line. We see what's called here a triple top, and it broke down below that triple top. Okay, but eventually it broke above that old resistance and became a new support line, and we see a support line here and it bouncing off the support line level here. Okay, so the market is at a point in terms of its technical ability as to whether it's actually going to fall below this line or it's going to rise above it. And so if someone was entering this trade right now, I possibly would see it as a buying opportunity, but I'd be putting a stop just slightly below this level, which is approximately, I'd say, about 6,050. Okay, so my support, I suppose my stop loss position will be just below that significant psychological level of 6,000. So again, these levels, 6,000 and the 2,000 for the S&P, are quite critical in terms of the psychological makeup of a trader that follows a technical analysis pattern. Okay, what I'm actually going to do is bring us back to that 1-year period. And I'm just going to draw a few lines and just to see. Where that's actually taken us. Okay, so again, that's quite interesting in terms of a pennant. This is known as a pennant when it comes to technical trading. Okay, so possibly a lot of sideways trading within this pennant, but somewhat might be small trends within the downward trends or slightly upward trends. But overall, there seems to be a huge resistance on this line here. Even though you have higher lows, the price actually, or the index in this case, actually begins to narrow in terms of its movement between the support and resistance line. And what you'd be looking for here is a breakdown of prices below the actual pennant, this line here. Okay, at times you may have a reversal of this pennant, whereby prices are actually bouncing off a straighter line, but are narrowing at a triangular, and you're expecting it to break on the upside. So in this case, it did break down once it began to narrow. Okay, maybe this is known as a dead cat bounce, where prices actually fall and begin to rise again, but it begins to narrow again within here. So this again is possibly a forewarning, which actually occurred around August, and that may be very similar to a forewarning we had for the S&P around that period, August, September. Okay, so if we were to draw moving average lines in here, you might have seen that crossover of the 20 down below the 50, just like the S&P, and then breaking above the 50 again like the S&P, and then eventual breakdown. So even though we don't have I don't see a shooting star occurring around here, but again, it's like we have a new high relative to all the other highs. So you see it's just marginally creeping up above that resistance line relative to all the other highs that have occurred at those defined time points. So again, that pennant had possibly indicated a negative or bearish market. Okay. Again, you could continue on with these lines here. If you had spotted, I'm just going to remove the pennant. And we might put in somewhat of a channel possibly going on here. Okay, so again, it's almost like a mirror image of the pennant that we just saw, and prices are moving either direction. It seems to be bouncing off, and it seems to be here trying to break above this resistance line. And what we're looking for is a bit of strength to indicate to us whether this is actually going to be more long-lasting. Maybe looking at volume indicators, or possibly even the relative strength index. For some reason, I'll try it soon again, but I don't think I can get the relative strength index working on this. But it'd be interesting to see if there was a lower high in the relative strength index relative to the S&P. And I might bring us back to the Yahoo Finance chart to actually see if that actually occurred. So you see it actually, there was a breakout, but it's a false signal. It quickly fell down below that resistance line, tried to maintain its ability above, and again broke down. And again, around this point, we may have seen us heading toward a line, that support line. And again, there's a huge drawdown in the marketplace. Okay, so yeah, so we see a huge movement down in that in the FTSE 100. Okay, I'm just going to again draw this line across. Okay, to show our support, identify our support line. Sometimes Fibonacci numbers are used as well, actually, in order to identify whether we are actually after reaching a certain high or a low point in a particular market. We can actually see what's known as a Fibonacci retracement. And I'll go to the current low level. And bring us up to that old high that we've just seen. Okay. So with Fibonacci's, this is another way of analyzing whether stocks are going to, if we're going to experience an increase or a decrease in stocks. So, or in this case, the stock market. So the S&P 500 fell significantly, as we've seen. We're just using this as a possible indicator to us. Whether this is the bottom of this particular move or not is another thing. But if it is, we may have this stock market we'll be looking for, and S&P 500 ahead toward the 38.2% level of the Fibonacci. Okay, this in itself needs further explanation, but it's based on a particular pattern of adding a new number onto a previous number, following the sequence 0, 1, 1, 2, 5, 0, 1, 1, 2, 3, 5, 8, etc. So adding a new calculated number to the previous number beside it, eventually coming up with what's called the golden ratio. And the golden ratio is given this number 0.618 or 61.8%, or another one 38.2% or 0.382. So technical traders believe that stock markets tend to follow what's called the golden rule or the golden ratio. So if the markets actually fall to a particular level, which I've highlighted here, we may see this being a support line, like the way we've come across it earlier on over a 2-year period. Okay, so this possibly could be seen as a support level. And if that's the case, we'd expect the market to reach approximately 6,400, especially if the RSI has indicated an oversold position. Okay, so this could be seen as a buying opportunity in the FTSE 100, okay, based on maybe 2 technical indicators. One is a long-term support line based on what's occurred back in July 2013, particularly when you consider a 5-year chart on the FTSE, where we've had that support line, that long-term support, and being the old resistance. So to me, in the short term anyway, the FTSE, I reckon, could be a good buying opportunity, but remembering to put in a stop loss just below the psychological 6,000 level, because you don't want to be stopped out too early. So we may see this based on the Fibonacci retracement heading up to that level of 6,388 in terms of the level for the FTSE 100 and the Fibonacci retracement. And if it breaks above the 3.382 or the 38.2%, you may see it head towards 50. Now 50 will be a critical level, which is 6,486 recorded on my Fibonacci retracement, but this could be seen as a critical level. It may break above quite easily, and if it doesn't, if it breaks below again from 50, we may see it retracing back down to the level that we currently see around the 6,000. If not, we may see it reach a 61.8% level on the Fibonacci, which is 6,583. Okay, so we have kind of like 3 milestones that the FTSE could reach. And the first one will be the 38.2% at about 6,400, heading towards the 50% level, and then again towards the 6,600. So what's actually interesting here is maybe where this level here, the 61.8%, the golden rule or the golden ratio in Fibonacci, it may be seen here the bottom of this particular move, and likewise the 50 is, or possibly the 38 is somewhat coinciding with the levels that we see in these previous patterns. Okay, I'm just going to again go back to Yahoo Finance, and check the FTSE. Again, if anyone has any questions in the meantime, if anything caught your eye, if you would like me to look at any particular stock, you can let me know. So I'm looking for the FTSE. Okay, just a little bit slow. Okay, just going back, apologies. The reason why I'm bringing this back here with the FTSE is I just want to look at the relative strength index and see, does that peak in the FTSE coincides with a lower peak in the relative strength index. Okay, so again, we have the peak here. I'm just going to intentionally draw it. Okay, so you see it is, even though I'm not covering this particular, it's only covering the closing position. It's not covering the actual high achieved. So that high would have been higher than all those previous highs. Okay, and again, seeing this line going across, it actually acts as a support line. Okay, so it's fine. It's attempted so many times to break that support. If you look back here, it's attempted it once, twice, and so many other times, 4, 5, 6, 7 times possibly, and then finally the 8th time, and it just could fail to actually break through it. And it's failed so many times here, but it made another couple of attempts. And again, it's interesting to see this the relative strength index. Okay, indicating again an overbought position. Okay, prices were lower for the FTSE at this point. The high was lower than the previous high, and that's again confirmed by the relative strength index. And again, the relative strength index drawn a line across here could indicate a downward momentum in terms of the FTSE, the potential move for the FTSE. Again, I'm going to zoom in and see, do we see that shooting star? Not really. Okay. Some might see it as a shooting star. It almost looks somewhat similar. Okay, I suppose it does have that spike upwards above the previous, and it has that small body, what we call a body in Japanese candlesticks. So again, that could be fairly similar to the FTSE that we've actually seen, that shooting star. So it did follow that same pattern. Okay, it might be good to have a look at some commodities and see what's actually going on in that space. So ADVFN, this is a free tool where you can use. It's quite good in terms of identifying futures and so on. I've been able to use interactive charts that you can actually screen capture, or use to indicate, say if you have an assignment or something, you can show your charts that you've actually drawn. So yeah, maybe have a look at what's going on there now. So okay, I might have a look at some crude oil. Again, crude oil seems to be having a bit of a difficult time in terms of its price action. See, can I do the candlesticks on this? Okay. And I'd like to go a little bit out. If this is a futures market, so we're not going to have a huge historical prices regarding these futures. So it kind of only begins at a certain level. So it's all we can really work with unless we're dealing with spot prices. But again, we could identify some of these positions in terms of the higher lows. You might like to maybe put another one in here if this somewhat interests you. And likewise, these are just some kind of charts that technical analysts might even look at. Okay, so I'm just kind of picking out highs and trying to match them up with some other highs. So if you're starting at this position, just say you're around this time point, okay, you'll see the overall trend, the long-term trend line. It seems to be bouncing off what's known as a support line. Okay, we notice here that there's a small bit of at play in terms of where the price action is going for crude oil. So being above this support line, breaking above this support line here, we end up with a new support line level and a resistance line. So it seems to have broken a support, or seems to have broken the resistance line, but it never had the strength to actually carry it through and maybe stay within this pattern if we were to increase where oil potentially could have gone if it had a lot of support in terms of the volumes being traded. And it didn't. Okay, so if it did, it would have been trading approximately around these levels here. It failed and broke back down below the resistance, hitting off the old support and coming down to this original support line. So again, we have some type of levels that are actually trending or trending sideways based on what's actually established at these lower points. So this being kind of like a new support line for this level here, and this being the original one, oil eventually broke down below this. Okay. What's interesting is actually what's happening here. Okay, oil broke above this resistance line and reached the old resistance quite quickly, and again broke down towards the old support here. Okay, so so based on the support levels, we could have seen oil coming trading above and bouncing off the support line towards this resistance, what could be considered a resistance level. Okay, so again, you'd always want to use support levels or support lines as possible targets for your stop loss. Okay, so if you had entered into a trade around here, okay, you might have established a stop position just slightly below that support line. And again, if it actually failed to break through, you might you're actually if it actually broke through that support line, you'd be actually triggered and stopped out. Okay, you might look at your resistance as target points in which to close out your trade. So again, if you're entered into a position here at the old support, and you would have established a resistance line and closed out your position approximately around this resistance line, above or below it. Again, if you're entered into oil, you'll be probably closing. I know it's again easy to say in hindsight, but you'll probably be closing your points either at the resistance and getting back in at the support. Generally, that's very difficult to do in reality. So what you want to do is identify a trending position. So someone that's a long-term trader, say looking at data that goes back maybe a year or so, you would enter into a position and hold on to it and accept this volatility, and that's actually occurring within the trend, but at least it's trending upwards, and you're there for the longer term, and gaining as time goes by. Whether I'm not sure personally, but whether anyone would have seen this as a bit of a worry. This is quite an exponential move on the upside and quickly break into resistance, and heading towards an old resistance line that was established previously, and coming back down off it could have been seen as a cautious indicator. Who knows? It's easy to say that now, knowing what's actually happened here. So with oil, I'm not sure, because I don't have any other further data to work with, based on its past history for these futures prices, and it's best to maybe look at spot oil prices if that was any way possible. But all I can say is that with Brent, which is currently trading at just about $85, and we might have seen an oversold position. I'm just going to see if there's a relative strength index available for this. Okay, there is, which is good news. Okay, so again, oh yeah, this is quite good, because we again see an oversold position. You see this band is at 70, and this one is at a 30. So 70 is considered an oversold position, and it actually broke the 70, and that actually occurred at around this time point. Okay, so that oversold position, that overbought position coincided with a somewhat new high, or a similar high to the previous. Okay, and it didn't happen here. Okay, for some reason there wasn't an oversold position, so this new high wasn't met at all with a new or relatively high level in the relative strength index. So again, if I drew a line down from this high point to matching up where this occurred, which is pretty much here. Okay, so we see the momentum is actually bearish. Okay, this is a bearish indicator. These particular highs and this extremely new high relative to what's actually gone on in the recent past is not being supported by a relative strength index. Okay, so again, this is indicating to us that there's a bearish outlook for this particular commodity. Again, we have a selling pressure going on, and at the moment we're at an oversold position. So there's a lot of bouncing going on here in this oversold position, and you may notice if we look carefully, there's like what's known as a double bottom, and where my cursor is highlighted here, this point is slightly lower than the other bottom, which is the newer bottom. So if you could draw a line going from one of the bottoms to the other, it may have that slight upward trajectory. So that possibly would be seen as a bullish indicator for Brent crude oil. So I know there's no other price action indicating a bullish signal because it's all red or all negative price action, but this may be an indicator as to identify that there possibly would be a turning point in Brent crude oil. Okay, so I'm just going to clear this and see is there anything that I could use for maybe a simple moving average line. So I'm going to get it again, put in a 20-day moving average, and oops. And I'll use a 50. See what crossovers occur. So again, the 20, in this case, the blue, if you can make out the blue smoother line, crosses over and above the darker blue or purple 50-day moving average line. So again, that is indicating to us whether there is any potential move and possibly an entry or exit position in the market for crude oil. So again here, where the 20 is actually above and remains above, this is a bullish indicator. Okay, price action is above both of them and they're all turning positive. Again, we see the 20 moving off the 50-day moving average, which again seems to be a bullish indicator. Again, there's a breakdown and a lot of sideways trading. So some traders might not like what's actually going on in this particular market at this point in time and prefer maybe to get out of oil and maybe into something else like gold or some other asset. I'm not sure whether I did this already. Just out of curiosity and see what these lines can actually bring to us. Okay, we see a pennant action occurring here as well. Okay, so again we see a pennant action, and we see the resistance line, and it did break above it, only to come back down to finish off the action that's occurring. Like I think we've seen this already in the S&P, and eventually it just saw a lot of weakness in the marketplace. Again, there's a lot of trending on the side on the upside in terms of higher highs and higher lows, but eventually it actually fails to bounce off this support line and heads down towards a new area in terms of its trending. So no longer are we trending on the upside, and again the momentum play for crude oil, Brent crude oil, is no longer at play, and we're heading towards a new type of sideways trading, you might like to call it, in oil. And again, this is quite critical in terms of the movement. As you see, the movement is actually getting smaller and smaller. You have a break up and then back down again. Okay, and again, the price action, a simple moving average lines actually break below. So once it's broken below, you need to get out of your positions. Okay. I'm going to check the Fibonacci on this one. Okay, I'm going to identify the low point. And the high point, assuming that this is the level that we're actually at. So remember, we did this for the FTSE already. So if I'm taking it that based on this oversold position, given that we have a double bottom here and it's slightly moving on a positive direction, the new bottom is actually higher than the previous bottom. This could be seen as a positive indicator. So obviously this isn't going to give you 100% of the answers to what's actually forthcoming for Brent crude oil, but we want to create an edge in the marketplace and establish whether we should be in a position or out of a position. And if we're getting in, do we actually, where do we actually place our stops? So, so here, a possible buy, looking at the Fibonacci ratio. Okay, we're looking at levels whereby we may be aiming toward a 38.25%. Okay, so we may see oil trading from $84. Now remember, this is Brent crude oil and not WTI. So we may see it going from about $84 up to approximately $94. So we might see a $10 gain in Brent crude oil. Over what time period, I'm not really sure. Just going to extend this across. Okay, and what's actually interesting is that 38.2% level, okay, that I mentioned was about $94.50, is coinciding with a previous bottom that we have established earlier on in the futures market for Brent crude. So we may see a bounce up toward this 38.2%, and that actually coincides with this level. So this was a drop in oil and back up again. Okay, so that may be a target, a short-term target, maybe over the next week or two, 3 weeks possibly. Given the rapid decline here, we may see a rapid return up toward that $94 level. Now, you possibly could be wrong, and if that's the case, if you're buying into this trade, I would put a tight stop in, maybe $1 or $1.50, possibly $2 below the current level of 84. Okay, I wouldn't even go below the $80 level, because $80 level again is like that psychological 2000 level in the S&P and that psychological 6000 level in the FTSE. So I think that's too far, too much of a distance to travel for oil to go from 84 down to 80, and you're stopping below that $80 level. You'd be better off having a stop that's quite close enough to this current level. Okay, so again, you might hear traders on recommending to buy Brent crude oil with a price target of 94.53, and that's all because they've used what's known as the Fibonacci retracement. A longer term target, if it does break above the 38.2% level, or $94.53, it may surpass that and head toward the 50% level, 98, and your next stop, either it's going to come off that level, that 50%, but your next stop is the 61.8. And again, it seems to be hitting this area. Maybe that's just a coincidence, but that's your next target. If it breaks above 94, you're talking about 101. Okay, so let me just take this back and see what the other level is. Okay, so I don't know if there's any significance with this one, the 106. Maybe again, it's just a coincidence it happens to be hitting these tops. But in the short term, you're looking at about $94, $95. I think I had that brought up again. Okay, about $94.50 or so. Okay, and it does break above that. Your next target is about $101 for Brent crude oil. Again, there's other fundamentals at play. Obviously, you can't ignore some of the fundamentals, such as what's happening with the dollar strength. And some of these come into play. So obviously the prices actually reflect people's decisions and how they actually trade equities and commodities. So we're trying to rule out and trying to eliminate all that noise in the marketplace and just try and summarize what's actually happening with the price action that's actually built in and reflecting all of that information and news. Okay. Maybe we'll take a look at metals, precious metals. We'll take a look at gold, if you don't mind hanging on for another little bit. Okay, take a look at gold and see what's catching our eye on this one. Again, I'm only referring to a couple of technical indicators. Okay. But they're quite useful indicators when obviously there's a lot more, and there's as well as that there's a lot of patterns that could be seen. And if I did see them, I'll highlight them, but I'll just refer mainly to the support and resistance lines. I'm gonna change that to a candlestick. Some people prefer to work with candlesticks or lines. Okay. Right. Okay, what's interesting is sideways trading in terms of the gold market at the moment. So again, I'm just going to draw that line. So that's quite an interesting move. Do I have, what's this? Okay, this is gold. Sorry, this is gold. You might see that 740, but that's gold in sterling. Okay, so it takes out it just converts it into sterling. So usually we're used to looking at gold in terms of dollar prices, but it should have a very similar price action. We'll see how this goes, and we might have a look if we get a chance to look at the dollar action for gold. So that target. Okay, we've seen. I was talking to some people, maybe some of you that are online at the moment. I was talking to you about 2 weeks ago about gold possibly being a buying opportunity around this level. based on what's actually happened at this point. Okay, so we see, and if you were buying into it, you'd be putting in a tight enough stop, because you don't want it to be brought back down here and being stopped out. Okay, so in case you're wrong, you just get stopped out at that position, and you might enter back into gold if it did fall down to this position here. Okay. And again, we want to identify what could possibly happen very soon. And you see it's heading toward a resistance level that is pretty much being met by the past prices pretty much met this resistance level again. So this could be a target to get out. If you had got in around here, this is your target to get out. Okay, you may not trigger that get out until you might like to see the price action, maybe trying to break above it. But if it doesn't fail, if it actually fails and starts to turn around again, it might be a good idea to get out of gold at this particular point. I'm going to check and see if there's a longer chart available. Okay, all right. Okay, that's interesting again. Okay, that might be cause for concern for gold buyers. Okay, so again, we have a possible old support line in which prices actually bounced off and broke below. So you see 3 times it bounced off this old support line and it broke down below it, and a new support line was created. So again, there was attempts to try and break above it, and it failed to materialize. So gold buyers may see a turnaround again in gold prices down towards this resistance level. So caution you should be cautious if you're a gold buyer, or maybe even consider shorting gold. You could short gold today with again a tight enough stop, just marginally above those previous highs here. Okay. In terms of the long run trend for gold, okay, you might see a lot. Gold is kind of almost completed this long-term trend downward. When I say long-term, I'm only talking about 2 years. Okay, see if there's anything more to that. Okay, so it seems to have kind of somewhat reached its low temporarily anyway, and there's a bit of a battle going on between bull and bears. So gold is trying to break above in pounds term heading towards that 800 pound level, and heading down towards a support line at this point. I'm going to again take it back further. Before to do that, actually, I'm just going to draw another couple of lines across here. Okay. Okay. I might not go back further. Okay, there seems to be okay, so we have a long-term trend on the upside, complete breakdown on gold from its previous highs, and then a reversal. So again, it's something to be cautious about. You may possibly, I'm not sure if I would really consider this as a head and shoulders pattern, but it possibly could be seen as something that's emerging that's somewhat like a head and shoulders, this being the shoulder, the head, and another shoulder emerging. So we may see, if that's the case, we will see gold prices falling below this neckline and heading toward a downward level. So we may see cheaper gold prices. Again, fundamentals at play could indicate otherwise, especially if some countries like China are selling dollars for gold. But I suppose there's a bit of a battle between bull and bears in terms of the price action. Okay. I'm going to try and check some stocks to see, because it's all been indices and commodities up to this point, and I might just look at one stock if anyone has a suggestion. Okay. Just before I do wrap up, within here we have financials, which is more looking at fundamentals. So if anyone is interested, I could hold another webinar next week and maybe talk about the fundamental side of things rather than just technicals. Or if you like the idea of doing more technicals, I'd be happy enough to do that with you. So Aer Lingus is in the news at the moment. Okay, it doesn't seem to be as liquid. Let me just click on financials to show you what I mean. Okay, no data for that. Maybe more the US. Might have something more. I just want to check this graph, and if we're not getting much of a price action, I'll use a UK or US stock. Okay, that's what we mean by not being much of a liquid market. Okay, so there's not as much movement for that particular stock. So we'll see what it looks like. The year might be better. Okay, it's a lot better. So again, right, I don't want that to happen. Sometimes there's errors in the ADVFN, which gives us incorrect highs or lows for the market. So I'm just going to go back to the price line. Okay. So again, we have possibly what's called a double top. Okay. So with this double top, the following one is quite weaker or lower than the previous. I'm just going to do an RSI on this. Again, this is a momentum play. Okay. So this, right, so we have a high that might coincide with this high at about a 70 level. So this again is just 14 days. So this is a 70 level. And then this other high, just want to try and be as accurate, is approximately 70 or just greater, I'm not sure. Okay, so these two highs, again, this one does indicate a bit of a strength in terms of the price momentum, but it's the reverse of what we've seen earlier on. This high is actually lower than the previous high. What we'd be looking for if there was some strength in price action, we would have the RSI here being higher than the previous RSI, and this also coinciding with what's actually the story that's being told here. So this high should be higher than this previous high. So again, they're conflicting with one another. Okay. And again, we have a long-term support line when we're talking about a 2-year period. So again, we might see this price action hitting towards this resistance, or sorry, this support line, and we may see it Ryanair going up. So if you were looking at Ryanair based on just a 2-year window, price action window here, you may see this as a buying opportunity. But again, I'd keep it a very tight stop. The reason why I'd give it a tight stop is that the price could fall below here because there's weakness in the market for Ryanair. Okay, so you see how there's a slight downward movement in terms of the previous highs. But if I take this previous high and this one, you might see a pennant forming. Okay, that could be indicating to us that there's some kind of ending in sight in terms of the movement between, in this case, this resistance line and this support line, and we may see a break on the upside. Okay, again, I'm just going to take this to maybe a 3 and then a 5 year and see where that takes us. Okay, it doesn't. Those charts aren't. Those few lines haven't really given us any indication of what's to come. But again, it just shows momentum breaking down. And below, if we had a support line here, if we were trading Aer Lingus at this particular point in time, you would see those. We would see this support line being broken down relative to what's going on. So there's a channel being formed, and we see the breakdown here and a change in direction. So again, we saw that with what's happening at the moment with the likes of the FTSE and crude oil and the S&P. So it broke down at that resistance level. And again, if you were just assuming on this point here, again, you would see like what we're experiencing at this point, a double top. And this top is lower than the previous top, just like what we've seen here. And we've seen the downward trajectory towards these levels. Okay, so we might see something occurring. And that's why I'm saying put in a tight stop, just in case it does break down like the way it did here. Or you might benefit from an upward movement. Okay, so usually it tends to break up above where the pattern occurs. So let me just draw. So again, I'm just drawing this based on these three. We see this coming down toward that level. Okay, and if again, I know it seems all these lines are drawn, but again, it's maybe something that you might be cautious about, this being the old support, and it's broken down long term, it's broken down below that support line. Okay, I just based it on these three, coincides with this one, and it broke down below it to this level. And we might see this long-term upward support line as now a resistance line. So the price action here is almost being faced with two resistance lines, okay, and one support line. So again, it's something that if you were trading Aer Lingus, something to be cautious about. And if you wanted to take a risk, maybe a calculated risk at that, it may be a buying opportunity for Aer Lingus, but again with a tight stop, not to buy Aer Lingus possibly for the long term. Again, what's good for us at this point here is that we're oversold. So there possibly is an oversold position. Okay. Let me see this. So we have a downward movement in the RSI too. Okay. Okay. I think I'll leave it at that for the moment. I'd love to hear your feedback. What I, I'd like to hear your feedback, whether some honest feedback anyway, some criticism as well as, the criticism can be good because I could improve on the presentation here. This was pretty much off the cuff, as I had mentioned to you previously. So if you wanted more of a preparedness in terms of presentation slides, and if you wanted to look at technical trading from almost a hypothetical situation, I could do that. But I think it's really good to look at a chart in terms of identifying patterns and seeing what's actually out there, because looking at hypothetical situations, it's all well and good, but pushing yourself in a position where you actually have to make decisions based on what's going on in the stock market or commodity market is pretty much good. And at least we can, with this being recorded and available on YouTube, once I stop recording this webinar, it'll be interesting to see in a week or 2 weeks time, possibly 3 weeks time, what actually materialized based on my suggestions for the FTSE, the S&P, crude oil, gold, and Aer Lingus in this case. And I'd love to be able to do more, but with the time it is now, you probably have enough of it at the moment. But it'd be great to actually hear from you. Maybe even if you're on Facebook, like Economic Rockstar on Facebook, I'd love you to like the page, and that way I'll be able to give you more updates on what could actually happen, and maybe even suggestions if you want to engage with me on Facebook. And you could make some suggestions as what's to come. Also, as you're aware, I have a podcast coming out on iTunes, and we'll have people speaking who does this, who actually does this type of thing as a career. So, look, thanks very much. And if again, we might do some technical analysis that next week, or possibly fundamental analysis. Thanks. I see some of your names: Ankit, Chris, Patricia, Iraq, John, Jared, and Paul Rick. Thanks very much for joining me. Mm-hmm.